A nonprofit can have money in the bank and still be in financial trouble. The question isn't just how much money do we have, but it's where did it come from? Where is it going? And are we actually financially sustainable? Many nonprofits, leaders, and board members that are responsible for finances for nonprofits, they're responsible for these finances, but they don't have an accounting background. Financial statements aren't just reports for auditors. They're not just reports to post online. They're tools to help you with decision making. Today we're going to break down statement of activities, net assets, program and administrative expenses, what's the difference between both, and then questions that every nonprofit board member should ask. So the big picture here, there's usually 3 financial statements that you'll see on a monthly basis. So those 3 statements are your statement of financial position, your statement of activity, and then your statement of cash flows. So your statement of financial position is like a balance sheet. It shows your assets, your liability, and any net assets that you may have. So it's showing what do we own, what do we owe, and what is our financial position as of today. So what do you own, what do you owe, and your financial position. So some examples here. So for your assets, that's always the top of that report. Assets include cash that might be sitting in bank accounts, investments, receivables, property, but it also shows liabilities. The next section in the middle, your liabilities can look like loans, accounts payable, so bills that you haven't paid yet that you need to, any accrued expenses that you may have, and then that bottom portion is with a for-profit business, your equity, what the owners own, but for a nonprofit, that is your net assets, what's available to the nonprofit. When we move into the statement of activities, that is like an income statement. And what that answers is, are we operating at a surplus or deficit? How can you tell that? If you scroll all the way down to the bottom of that statement of activities, that profit and loss or income statement, it'll show you your net revenue, net income for that period. But the next question to ask with your statement of activities that it's going to answer is, where does your revenue come from? So the very top portion of that report, it's going to show you, is your revenue coming from donations, contributions, grants, whatever it may be. Are you selling a product? That is all on the top of your statement of activity. And then the statement of activity also answers, what does it cost to run our programs? Where is our money going? How are we spending our funds? That is all down on the bottom half of this report. It'll show you the true costs. What are your costs for accounting? What are your costs for salaries and wages? Things like that are all down there. Your third statement here is your statement of cash flows. So the biggest thing that the statement of cash flows answers is, are we generating enough cash to operate? Because you may be generating a profit and not have any cash. And without cash, you can't pay your bills. Without cash, you can't make payroll. So cash is just as important as profit. And if for some reason you're not looking at a statement of cash flows on a monthly basis, you do at a very, very minimum need to be looking at, where is your cash? And what is that cash maybe projected to do in the future? So the statement of activities is where many nonprofit leaders get confused, because it looks like a profit and loss statement, very similar, but there are some important differences, and we're going to cover some of those now. So the statement of activities tells the story of your financial performance over a period of time. So I want you to think, when you see your statement of activities, what happened financially during the year? And you can adjust that point in time. You can make it for just 1 month in time. You can make it for a year in time. You can compare it to, and if you use something like QuickBooks, compare it to last year so you can see them both side by side. So in the revenue section, we're going to go a little deeper here. So common nonprofit revenue sources that you might see: contributions and grants are normally listed first. Some examples here include grants from the government, grants from foundations, individual donations. Maybe you have corporations that donate to you. That would be listed up here as well. Some of the questions about these contributions and grants, though, are the grants restricted? Are they tied to specific things? That's what restriction means. The person that gave you the money, did they tell you this money has to be used for this person's salary? This program over here, whatever it may be. So that's one piece, and they'll reflect in the revenue section up here is it or not. Sorry. The next question that kind of gets answered, you need to be asking here is, are donations consistent year over year? And if they are not consistent year over year, how do you get them to be consistent on a yearly basis so you can then project your revenue better, differently? And then another question when you're looking at this revenue section is, are you dependent on one major donor, one major funder for your nonprofit? And this is huge because if that, whatever it is, grant, donor, whoever it might be, funder, decides not to donate next year, the grant dries up and goes away, whatever the case may be, budgets get cut and they can no longer donate to you, what happens to your nonprofit? How do you replace those funds going forward? Can you replace those funds? Do you have to significantly downsize? Do you have to cut programs because you lost that funding? It happens. So if you see that you are dependent on one major funder right now, know that you can start putting plans in place, actions in place to change that and make a difference. And then if nothing happens and that major donor stays a major donor, now you've just increased your revenue. But if for some reason you put plans in place and the major donor stops donating, at least you're covered. And you can keep your doors open and keep serving those that need you the most. So that is contributions and grants. People that are giving you money, corporations, government that are giving you money. Then we have something called program revenue. So program revenue are things that you are giving in exchange for. So tuition, if you are giving a program, if you do a program online, in person, whatever it might be, some type of educational program, and you're a nonprofit, but you ask for a really small donation as tuition, that is considered program revenue. To run that program, you charge tuition. So that's program revenue. Same thing with membership fees. If you have a little community that you charge membership dues for, event revenue. So if you a 5K for your nonprofit, event revenue would fall under program revenue. Maybe you have a gala or a luncheon, that would also be program revenue. You also have service fees that fall under program revenue. So some questions for the revenue you're bringing in this section here is, are these programs financially sustainable? Do they sustain themselves with what you're charging? And maybe bring in revenue to cover some of the overhead costs you have, like an executive director position or a development director position, or to keep the lights on throughout the year when this event is not occurring. Do these programs not only sustain themselves financially, but do they help sustain your organization throughout the year? And if the answer to one or both of those is no, then it's probably no to this next question, which is, are we charging appropriately for tuition and event registration? If your program is not financially sustainable, you either need to find a way to cut costs or raise more program revenue for that event, whatever it might be. So then you have other revenue that falls in the revenue section, which includes interest income from a bank account, same thing with investment income, rental income if you rent anything out. So that's just the revenue section. So your nonprofit can raise $1 million and still fail financially because revenue does not equal sustainability. You may raise $1 million this year and then spend it all, use it all, blow it all in the next 2 years and have to close your doors because it wasn't sustainable and you couldn't keep that going. So to generate $1 million in revenue, maybe you had $500,000 in expenses, but if you stopped earning revenue, you still have those expenses until you cut them. You have to understand not only your expenses and cash flow, but also restrictions. Just because you got a grant for $1 million to cover one specific program, that does not mean that you can use those funds for anything to keep your lights on. If that revenue you brought in is restricted, it is stuck in whatever restriction it's put under, and it's not up for grabs. So it may look great. Oh my gosh, we brought in $250,000 worth of revenue this month. But if all of that's restricted and none of it can cover your light bill, then you can't pay your light bill that month, even though you're showing $250,000 worth of revenue for the month. So something to keep in mind, your restrictions, your expenses, and your cash flow that comes with your revenue. One of the biggest mistakes that I see nonprofit boards make is misunderstanding net assets. So net assets, we already talked a little bit about this statement, so we're still on that statement of activities. We talked about revenue, we've talked a little bit about expenses, and then this is that bottom section, which is your net assets. And for-profit companies, it's their equity. It's how much do the owners own in that company. For nonprofits, though, it's net assets. It is assets minus liabilities equals net assets. So there are 3 categories of net assets down along the bottom, and it is without donor restriction. So that means that that money is available for all of your general operations. It can cover payroll, it can cover keeping the lights on, it can cover the cost of the 5K if you want. If it has no donor restrictions, you can spend it how you see fits. And some examples of what that would look like: a general donation. If someone gives you $20 and says, here you go, you can then count that as without a restriction and spend that how you see fit. Same thing with earned revenue. If you earn that revenue, you charge tuition for your program, that becomes without donor restrictions, and you can spend that how you see fit. The second category is with donor restrictions. So this money has to be used for specific purposes, and a lot of things that come with donor restrictions, so there's a few different things. If it comes with a donor restriction, a lot of times those donors want to see reports on the back ends. They want to see that you spent the money the way they told you to spend it. So it's money that has to be used for a specific purpose. And I have seen some restrictions on money where if you do not spend it the way they want it spent, in the time frame that they want it spent in, they will claw it back. And they will demand that you pay it back. Even if you've already spent it on something else you weren't supposed to spend it on, they don't care. They want their money back somehow. So be very cautious when you have assets with donor restrictions, that you know what it's for and you're using it for that specific purpose. So some examples here: if you get a grant and that grant can only pay for youth programs, you better not spend that money on anything for adults. And same thing if a donation is given to you. So there are donations that can just be general donations, but there are donations where someone says, this is for the building renovations, or this is for the sign on the stadium. Whatever it might be, then that's specific. And you have to treat that with restrictions and spend it for that thing. The third category of net assets on here is board designated funds. So board designated funds that's money that the board has set aside for a specific purpose. Maybe the board has set aside money for projects that they know are coming down, or operating reserve if they know they want 3 months worth of operating cash on hand. Just in case something happens to the revenue, the board can make that decision. So the board if they decide to set aside money for a new field, they can usually later on in the future change that designation. So let's say the board sets aside money for a big project and that project comes in over budget or under budget. For some reason, maybe it doesn't even happen at all. Because this is board designated funds, the board has that authority to designate funds, but also to undesignate them and change them as well. So keep that in mind too. If your board decides to designate something, it adds like a temporary restriction that can maybe be undone on there. So some board questions for this statement of activities. Your board should be asking how much of our net assets are actually available. How much is available to spend on operations every day? Are restricted funds limiting operations? And do we have enough reserves to do what we need to perform the duties that our nonprofit needs to perform? Your nonprofit may have $500,000 in net assets, but you might not actually be able to spend it because of restricted versus unrestricted cash. If that full $500,000 is restricted to a specific program, but you really need it to pay payroll, you can't use it to pay payroll. You won't pay payroll, which means you have to consider shutting your doors down and giving back that $500,000 that you have. But if it's unrestricted, you can do whatever it is that you want with it. So the numbers on the financial statement may make it seem like the nonprofit is doing amazing, all this money that's being brought in, all these things that are happening, but it can be misleading because of the restrictions that might be placed on cash. So it's important not only for an executive and a development director to understand, but it's also important for staff of the nonprofit to understand, as well as board members to understand different restrictions that are put in place. And that'll help guide better financial decisions. So we're going to move into program versus administrative expenses. The nonprofit overhead myth has caused organizations to make bad financial decisions. So what do I mean by nonprofit overhead myth? So expenses are usually classified as program expenses, management and general expenses, and fundraising expenses. So program expenses directly support your mission. Management and general expenses are necessary to operate. And then your fundraising expense is the cost to generate donations. So I'll go a little deeper into that. Programmatic expenses can look like program staff. If you have a staff member that teaches your program, that is a programmatic staff that runs that program 24/7. They don't do anything else but run the program. You also have supplies to make those programs happen, as well as client services or educational material. For management and general expenses, accounting, HR, insurance, board expenses, technology. For fundraising expenses, you have things, the cost to host fundraising events, any development staff, a development director, donor software to keep track of who's donating when and how to continue to engage those donors. So a healthy nonprofit does not have zero administrative expenses. That is not sustainable across the board for any organization. There will always be administrative expenses, and the goal is not to get it to zero, but the goal is to have it be relative to your other expenses. You don't want your administrative costs to be so high that everything else is really low either. So a nonprofit without expenses on accounting and HR and technology and leadership support is not efficient, it's fragile. Because without those pieces, technology, accounting, HR, how are you monitoring and building good systems for your nonprofit to be sustainable? So yes, there will be administrative costs. A nonprofit with 0% overhead is actually a red flag because every organization has operating costs. Every donor will understand that you have a certain level of operating costs. Now, if your operating costs make up 95% of the funds you bring in, that's not ideal. Maybe you're just a startup nonprofit, but that's not ideal. You definitely want that percentage to be on the lower side. I would not want my operating to be more than 50%, definitely way less than 50%. And strong infrastructure creates stronger programs. So know that every organization has operating costs. It's okay to have them. You just have to manage them. It'll never be zero. And you need it to create strong programs. So we're moving into how board members should use financial statements. So it's not only just reading it, skimming through the numbers, but you need to use these financial statements to make good decisions. These financial statements are the backbone of your budget. They're the backbone of where you want to go in the future. So board members, I've got a list here of a couple of questions that you should be asking. So for revenue, you should be asking, are we overly dependent on one funding source? Are grants covering the true costs of doing business? And is revenue predictable? Can we project out what revenue is going to be in the future? For expenses, board members should be asking, are expenses growing faster than revenue? Are we investing in infrastructure? Are programs financially sustainable? For sustainability, how many months of cash do we have on hand? Are we building our cash reserves? And are we planning for future risks? These are all questions. So as you're reading the financial statements, not only are these questions you should maybe ask the treasurer or the executive director, or if you have a CFO, great questions to ask. But these are questions that you can ask yourself as you're reading through the financial statements. You can look and see in the revenue section of the statement of activities, is everything coming from one funding source or is it diversified? Are your grants covering actual costs of those grants? Can you predict the revenue, or are we just getting revenue sporadically and it comes every once in a while? You can look on the expense side and see, where's the money going? Is it going into infrastructure? Are your programs being sustained with the expenses and revenue that are coming in? You can also see, if you're not sure how to calculate how many months of cash you have, you can absolutely ask. Someone can help you calculate it. But looking at in reserves, you can do that on the financial statements and see, is money going into savings on a regular basis, or are you constantly pulling from your reserves instead? Because those are two very different things. And I will say, some of these questions, whenever I'm reading financial statements, I like to compare financial statements in the current month to the previous month, and in the current month to last year, to see year over year, are we changing for the better or for the worse? And that's where I'm asking some of these questions. Is it changing, going the right way or the wrong way? It depends on every nonprofit, depends on the season. Some nonprofits are seasonal. And as far as should you be asking each and every one of these questions every single month, I think you should ask yourself that as time goes on. Should you pester your treasurer every month and say, are we dependent on one funding source? Because someone on YouTube told me I had to ask you that. And if they say no, you don't have to necessarily ask every single month, but it is important when you're reading the financial statements just to spot check and say, hey, do we get one big funder coming in, and are we relying on that one big funder? So, quick, succinct list here is 5 questions every nonprofit board member should ask about finances. What is our unrestricted cash? Are we operating at a surplus? Are our programs sustainable? Are we dependent on one donor? How long could we operate without new revenue? These are questions that I think should be asked at least multiple times a year, at least once a year, potentially more like quarterly is what this should be asked. As far as what's unrestricted cash, we should know that every month. With your financial statements, you should be able to get that information with what is unrestricted cash. So ask questions. Not only these 5 questions and the other questions I listed, but as board members, it is important to stay curious and to ask questions. So if the auditors come in and say something and you're not sure what they're talking about, ask them a question. If the bookkeeper comes in and says things that you also don't know what they're talking about, ask them. Executive director, it doesn't matter who it is. Now, there are ways to phrase questions in a good way and a bad way. Like, you definitely don't want to be accusatory when your treasurer gets up there and is explaining something. You go, I don't understand it, so that means you're stealing money. That's definitely not the way to approach that. But just be curious and say, hey, you said this one thing about that grant, but I don't know what that means. Can you explain that to me? And if they can explain it, I'm sure they will. And if they can't, hopefully they'll find someone that can explain it for you. So the financial statements tell you 3 different stories. The statement of activities tells you, are we financially performing? Okay, I said this very wrong here. Sorry. So your financial statements, I have like a little bit of a script I'm working off of. So your statement of activities is asking, are we financially performing? Are you doing well financially? The net assets at the bottom of your statement of activities is asking, what resources do we actually have available? Where are your restrictions? What's restricted versus unrestricted? And then expense allocation is showing you where you're investing money. Is it being invested appropriately, or is it being kind of spent to meet whatever need is happening at that moment, which isn't wrong either. So just know that the financial statements, I did not pull up a screen. I did not screen share to show you really what those look like. That can be a whole nother video where I walk you through, not necessarily line by line, but just walk you through like a mock nonprofit company's financial statements. But for the most part, with the descriptions written down for each account and the dollar amounts, you should be able to see and ask some of these questions and start to find trends. If you serve on a nonprofit board or lead a nonprofit organization, understanding your financial statements is one of the most important responsibilities that you have. And you can subscribe here for weekly nonprofit finance lessons. My goal is to put out long-form content once a week, a couple of short-form content, as well as post things to Facebook and LinkedIn and all the places. So please feel free to also leave a comment if you'd like to see this or something slightly different. I would love to offer some of that as well.